Good afternoon, everybody. What's up, what's up, what's up? We got about 9 minutes till FOMC. We're gonna let the music rock. We're gonna look at Mr. Powell here with his little laser eyes. And then we're gonna get right into it, family. Feel free to share the stream link out. Hit that like button. This helps. This is a public stream. Love and appreciate y'all. I'll be with you guys in like 3 to 5 minutes here. Indices rallying before news here, huh? A little bit anyway. Take a quick little look. Yeah, Dow still pushing. We took some Dow buys this morning. I'm already out of those though for 1 to 5. So not holding through news, but expect it to continue that direction either way. Alright. Yeah, nothing crazy happening right now that's not expected. Oil is still pushing to the upside. That's just no surprise. The Middle East news. Let me turn this music down a little bit for y'all too. Hopefully that's better. If it's not, let me know in chat. Family, we're going to look at some reactions from the market here at 2 p.m. for FOMC. See what markets do for the half hour between the results and Mr. Powell coming to speak. I'm going to dive into the report a little bit, see if there's any wording changing, from the last FOMC statement. And then we'll just make some plans for the future. Maybe we take a trade, maybe we don't. I really have no need to push the button. Again, we did our trading this morning, and we were wildly successful, so no reason for us to get too crazy today. Hopefully everybody else had a good trading day as well. Alright, we're 5 minutes out here. Actually, let me pull up the Fed website real quick. Make sure I have you guys all set up so you guys can see it too. Drag that to its own tab. There we go.
I 'Cause I can see it with your eyes on me. I like the way it feels with your eyes on me. I like the way it feels with your eyes on me. On me, with your eyes on me. I like the way it feels with your eyes on me. On me, with your eyes on me. I like the way it feels with your eyes on me. On me, with your eyes on me. I like the way it feels with your eyes on me. On me, with your eyes on me. I like the way it feels with your eyes on me. On me, with your eyes on me. I like the way it feels with your eyes on me. On me, with your eyes on me. I like the way it feels with your eyes on me. On me, with your eyes on me. I like the way it feels with your eyes on me. On me, with your eyes on me. I like the way it feels with your eyes on me. On me, with your eyes on me. I like the way it feels with your eyes on me. On me, with your eyes on me. I like the way it feels with your eyes on me. On me, with your eyes on me. I like the way it feels with your eyes on me. On me, with your eyes on me. I like the way it feels with your eyes on me. On me, with your eyes on me. I like the way it feels with your eyes on me. On me, with your eyes on me. I like the way it feels with your eyes
Alright, getting down to the final 3 minutes here. Just confirm from me, you guys can see this, right? You guys can see the Fed website. Let me know in the chat if you guys can. I don't see why you wouldn't be able to, but... Hopefully they're quick with this today with the updates. We're not sitting around too long. Alright, family. We're loading up here soon, man. Remember, our focus is on comments about the labor market, and if there's any little tonality shift around inflation, which I kind of expect, because we do expect that September cut, so those are the key things we'll be looking for. A little bit of a tonality shift stating that inflation is under more control, and comments about the weakening labor market being a bigger problem than they're previously identified. Alright, down to the final minute. It's gonna take them a little bit to get this up. Usually it takes them a little bit to get this up. The computer's also running kind of slow for no reason here. That is what it is. Alright, 30 seconds. Get him with a quick refresh, see if it's early. Nope. it would never be early. Alright, baby, here we go. Let's see if we can get that refresh. 1 second here. Lots of activity out of the market. Alright, let's get a refresh. Nope, still not here. Nope. There we go. Hey, let's go. Alright, let's see. The committee decided a solid pace in support of its goals. The committee decided to maintain the target range for the federal funds rate. Considering the adjustments to the target range, the federal funds rate, the committee will carefully assess incoming data, the involving outlook, blah blah blah. Yeah, we fucking know this. Range was gained greater confidence that until they get the same wording. Fuck off, Powell. Alright. Alright, not what we wanted to see. That's fine though. I still think they cut in September regardless of that. But it would have been nice to see. The committee's assessment technical wide range, labor market pressures. Let's see. Anything changed here? Engage in dollar roll. Alright, yeah, we're gonna have to look to Powell. There's a few other people that were looking for this too. Shout out to I think it was Capital Hungary that put a post out there, which sometimes they have good content, sometimes they have really shit content. But I'm pretty sure they had commented on this as well. I want to just go real quick back to the June PDF. Yeah, it's gained greater confidence. Okay, so they changed nothing. Alright, so we gotta listen to Powell, man. This ain't gonna tell us anything. Let's go take a look at what markets are doing while we wait for Powell here. Nasdaq did spike up a little bit. Outside of that, she's done close to nothing else. And a lot of this was priced in this morning. Gold came down. Interesting. Oil, no reaction. DXY spiked up. Okay. Alright, so we gotta just wait for Powell at this point. We didn't, there's no changes on the stuff we were looking for changes on. Which is, I guess not really concerning. Again, we would've preferred to see them change the wording that's specific. Let me zoom in here so you guys can, like, actually read this shit, too. Let me see if I can find it now. Right, until it has gained greater confidence. We were kind of looking for statements like this to kind of change, kind of remove, like, the word greater would have been, like, really good. Again, like, shout out to the people on Twitter and X that were talking about this all week. But again, this is stuff we've mentioned as well. Again, it still seems like they're not fully confident that inflation's under control. Maybe Powell has a little bit of a different tonality in answering some of the questions about it. But it would have been nice to see, like, the word greater here kind of, you know, disappear, and it would just, like, maybe just gain confidence. Would have been really good for September cut. So this isn't really looking like they're trying to give too many hints about what they're going to do in September here. But I still think in the September meeting we cut, again, there's a small chance that we don't do it in September, and again, maybe they do it really late in the year, like December. But I'm pretty sure the data, in my opinion anyway, and that's just my opinion, but the data that we have is sufficient enough to actually lower rates. Let me just see real quick, CPI. Just bring up the inflation data real quick as I leak my email addresses there. And CPI, again, CPI is still, we've talked about this too, right? Like, CPI is, I mean, at 3%, and again, you're gonna look at, like, core and PCE a little bit more than this. But again, like, we're right at that 2% range, man. Like, we can't dip any lower now without being in the 2% range. So this is, again, why I still advocate for that September cut. It's like, again, if CPI comes out again with the next release and we come out in the 2% range, I just don't see how Powell doesn't do a test cut. Like, I don't see why we don't just reduce rates by 25 basis points. I don't see why we don't potentially do 2 back-to-back and then maybe pause. Again, September, December would be that's not really back-to-back because you have the November meeting, but nonetheless, I still think a September-December cut makes a lot of sense in, like, the broader range. But I guess they don't feel confident enough to put that into this, which is again a little interesting to me. But again, we'll hear what Powell has to say specifically. I'll bring up the stream. Again, we got 25 minutes until he's gonna speak. But we'll sit back and we'll kind of wait here for CNBC and these guys to go live. Again, not too much happening on the market side of things, I don't think. I mean, dollar index fading off a little bit. Gold really not doing too much. Indices. Yeah, no real movement yet. A lot of people waiting on guidance. Obviously, if this does move, we expect it to move up. I don't think we see a day where indices sell off for any reason, but it is what it is. Bluffing probably like the unemployment numbers. Yeah, well, they're two different entities, so like the Fed's not putting out that data. I don't think it's a bluff. I wouldn't call it a bluff. Again, I want to hear what Powell's got to say. I want to hear the way he phrases stuff, and I want to hear them pressure him about the labor market and just see if the stance has changed at all. Just because they didn't write it down doesn't mean that he's not gonna clarify anything a little bit differently. Again, though, we were already long this market this morning, so we really have no reason to trade. If you guys were on the morning call, I actually had scalped a little bit more at an NQ right before the release. I had actually, I had taken it when it kind of, oh, this is the Dow, I took NASDAQ. But, after we kind of did this and we kind of recovered, I actually took like a pre-news scalp just to clear out the extra $400. Again, it's a Top Step combine, so it's like I wasn't really like making money per se, but again, got us a little closer than that $900 we pulled this morning. So at the very least, I need 400 less. But yeah, these markets probably gonna remain bullish again. We're gonna have to hear what Powell has to say, in which I'll shut down the music and we'll kind of come into a more of like a news broadcast here. Oh, hold on. I'm getting notifications. Did I misread something? Did I miss? Did they say something? Hold on now. Hold on now. Why am I getting notifications that say... somewhat elevated? Did they change wording? Did they change it somewhere else? Somewhat, but remains somewhat elevated. I skipped right over that too. Let me see. Hold on. What's it say in the June? Oh, okay. So they did sneak a word. Okay, they did sneak a word in here. Okay, I'm looking at the wrong spot. Inflation has eased over the past year, but remains elevated. That was in June. Now in July, they say remains somewhat elevated. So there's the change. All right, let's go. Love it, love it, love it, love it. Ignore what I said before. They're definitely giving hints. I was just looking in the wrong section. The committee seeks to achieve maximum employment. Let's see, did they change anything else? The committee judges that the risk to achieve inflation goals continue to move in a better balance. The economic outlook is uncertain, and the committee is attentive to risks to both sides of its dual mandate. Okay, so we got that change. Here it is, right here. The word somewhat. Okay, interesting. Let me just see what else this article says real quick. What did they say about that? Has anything changed in the labor market? Yeah, see, so this is the only change they made. They made no change about the labor market. I still want to hear what Powell's got to say about that. And the reason why I want to hear what he's got to say about that is if we take a look at the last projection materials that the Fed put out, again, they're looking at the unemployment rate, especially for this year, again, being, at least in the median, being 4%. We're already above that at 4.1. And again, we're probably going to encroach on 4.2, 4.3 by the end of the year, which is also going to be above their 2025 median expectation for unemployment. This is a load of bullshit. This is not, we're by 2025, we're going to be at like 5% unemployment. Again, if I'm wrong on that, so be it. I'm probably not wrong though. That's my belief. If you disagree, I don't know, thumbs down the stream and leave, I guess. But for me, this is a load of shit. And I think by the next time we get economic projections, which will be in September here, so it's actually the next meeting that we have. I do think they changed that. So we'll have to see, but they did add that somewhat word inside of here. So Powell's gonna have to explain their thought process behind that. I'm sorry, I'm not even sharing the right fucking screen with you guys. You guys gotta say something when I'm doing that. But again, here's the difference right here, but remains somewhat elevated. Whereas, again, now I have to just re-show you guys, because you guys weren't telling me I wasn't sharing the right screen. Whereas it used to just say, remains elevated. So again, their perspective here is that their handle on inflation is getting there. Again, now we just need them to acknowledge the fact that they're not going to be able to achieve maximum employment. It's kind of funny too, because they don't really define this. Like, this isn't really defined, so maybe we get more of a definition of that. Maybe we get a better expectation. But this is fantastic news for those of us that expect a rate cut. Alright, let me switch you guys back to the charts real quick. Let me just send some updates here in the Discord. Hold on. Oh, hold on, that's not right. I did this bold. Why did you? Alright, baby. Come on, Powell. I hate this, like, half-hour, It would be good. I mean, if you're looking to trade, I would see if Powell says something that gets us to fill this wick. It's probably pretty unlikely. So I don't think with that change, I don't think there's gonna be anything that he can say to bring it down here. But if the market makers that be bring us down here, we can start getting rejections off this again after we fill the wick. That'd be your best bet to try to join this directional long. But again, you're super late to the party up here. So again, unless you're trying to buy in the fresh liquidity on some sort of like breakout retest, which is not my style, but if it's your style, the setup is definitely here. I would just try to get below this 19,337 if you can. Again, I doubt that you'll be able to, but that'd be the only reason I would take a trade. Just real quick, take a look at gold. Gold hasn't really done anything today. A very ugly day. Very ugly day. Dow's still pushing. Easy money day, man. Easy money day. Let me pull up this live stream real quick. See if I can get this up to. Oh, hold on, my bad. Oh, whoops. That's not what I meant to do. That is not what I meant to do. 1 second, family. I'm over here messing everything up. It says unemployment rate has moved up but remains low. Oh man, they're really gonna ignore this issue. Oh. The thing is though, the only thing they can really do to combat that is to lower rates anyway. So they might as well lean into it being an issue. But I get it, they're trying to save face. You don't really want to make the public believe that there is an issue with the labor market. People would start to freak out. But I think people are also aware of this, man. I mean, I don't know if there's anybody in chat. Let me know if there is. If there's anybody in chat that's recently tried to get a job in like the last 6 months. Like share your experience. Like, you've been getting a lot of callbacks. How many applications have you put in? We've talked about this a little bit already with a few people, and it's just like there may be a lot of jobs opening, man, but there's like the jobs that are offering livable wages, or again, a lot of jobs that are created are either government jobs or they're part-time. Like full-time jobs are rapidly falling. So there's a lot to be yearned for in the labor market. It's again, this headline they have here has moved up but remains low. I just don't think that's a valid statement, man. Again, immigration, whether legal or illegal, there's been a ton of people that came into the country. Open jobs are on the decline. It's like, I think there's more people that have come into our country, both legally and illegally, in the past year than we even have jobs open. Like, that's not great, man. There's like, you can't... It's manipulated data. You know, you're talking about millions of immigrants coming in. Again, whether it's legal or illegal, regardless of how you feel about that, there's millions of new people in the country. Again, that are not a part of that data set. Most of which, I should say, are working age or gonna be working age. And it's just like, that has to be accounted for, man. I could not agree with the statement that they think it's actually this low. I find that very hard to believe. Let me see. DXY looks like it's heading to a bear run. Yeah, I mean, the news is inherently bearish for the dollar. Again, it might have spiked up, but it's not bullish news. Let me see. I have not, but friends of mine are struggling to get good jobs and internships. Yeah, I believe it, bro. I believe it. Now, the Fed can say whatever they want about the labor market. It's just not the reality. It's just not the reality. Again, data lags, data lies. Only work you find quick is the warehouse jobs. Yeah, I mean, maybe. Again, I haven't worked a job in what's now almost 3-4 years at this point, so it's like, or it's gonna be 4 years in like December, so I don't really know what the actual market is like out there, but I have not heard good things. Let's take a quick look. Let's see how Daddy Bitcoin is responding over here. Yeah, she's doing nothing. Okay, cool. Okay, cool. Yeah, DXY, again, fading off a little bit there. Let me see, did this push into a nice zone? Let's see, any sort of POI we play here? I guess this is technically a lone candle, but that's not that nice. And that's the only thing you have, though. Yeah, no real nice POI that we played off there. And this was all yesterday's analysis here. I am sharing you guys, okay. Just making sure we on the chart. Alright, we got 9 minutes till Powell, then I'll shut my mouth and we'll listen to the man himself. But if there's any questions in chat, if you guys need guidance on digesting this data, or clarifying questions, or pairs you want me to look at, I'd be more than happy to do that. But if not, we're gonna just wait for Powell here, see what he's got to say, and see if we can potentially maybe trade off of that. Able to write in this chat? Did somebody accidentally? That was what's happening with altcoins? Not much, bro. Altcoins ain't gonna do shit until crypto gets, till Bitcoin gets back in the thing. Here's the thing, I talked about this on this morning's live stream, which was, of course, you know, for the trade room, or if you snuck in through one of the 3-minute links I put out there publicly. But we talked about this a little bit this morning. I don't expect crypto to do much till after or around the elections. Now, if it does something before then, fantastic. But it's my belief that we don't do anything till after elections. So you should expect some more pain. So I was just reading this on screen here. But also, if you're playing with altcoins, man, you don't have a nice bag of Bitcoin. I don't know, man. I feel for you. I really do. Like I've said this a million times, but if Bitcoin is not 60% of your crypto allocation, you're doing something wrong. And I know everyone's like, oh, all coins are gonna outperform Bitcoin, blah blah blah. It's like, sure, yeah, there's a few that have outperformed Bitcoin, and it is true that the smaller the market cap, if it gets demand, it could outperform. But with that ETF, man, I don't know, man. If your Bitcoin bag is not loaded, the thing is, you're never gonna be able to load it. It's like, that's like, once we get over 100, I mean, even now, right? Like, I mean, if this applies to you, if you feel like Bitcoin, if you're priced out of Bitcoin, if you feel like Bitcoin is too expensive to own, let me get a 1 in the chat, right? Let me just put up 1 in the chat if you feel like Bitcoin is too expensive for you to get involved with, because that's how a lot of people feel, and I would call bullshit on that. That is how a lot of people feel, and that's why people chase altcoins without having like a proper bag. It's like if you were playing penny stocks, but like you didn't have any money in like blue chip stocks, or maybe even like, you know, a couple good like larger ETFs. It's like, why are you playing with penny stocks, bro? You don't even like, at that point, again, you're trying to get casino like gains instead of consistent gains, and I just don't agree with that. So bad way to look at it. What's my reasoning for crypto won't do anything till after the election? I'm using the election as like a time frame benchmark. It's not specifically to do with the election, but as we kind of discussed, and we're going to continue to discuss on this stream, that the Fed is going to look to cut rates in September, right? And I want you guys to put in the chat, right? When the Fed cuts rates, is that bullish or bearish for assets, right? Is that bullish or bearish for indices? Is that bullish or bearish for crypto, for gold, right? How would you guys interpret that, right? If the Fed were to cut rates, right? Is that bullish or bearish, right? What's the textbook answer? You guys put that in the chat for me, then I'll explain this. Got 35% of my bag in Bitcoin and Ethereum, but I feel like altcoins are really trash this cycle. Yeah, it's because all the money, because all the institutional money that you guys begged for went into Bitcoin. And the altcoins don't benefit from that. Right, all those inflows into the Bitcoin ETF does nothing for altcoins. And it used to be in the past that people would buy Bitcoin itself and then exchange Bitcoin for altcoins, which gave altcoins more demand. But you can't trade your Bitcoin ETF for an altcoin. So all that institutional money is just stuck in that Bitcoin ETF. That's why I kept telling you guys this cycle, I'm bullish Bitcoin. Like, don't ask me about altcoins. I'm like, if you're gonna buy altcoins, they better be layer 2s to Bitcoin. So it's like, again, I gave that warning, man. I said, listen, I'm adding to my BTC bags. Alright, and a lot of you guys said bullish, right? Bullish, up. Right? That's the common consensus. If the Fed cuts rates, then markets should go up. Right? Now, again, if you know me, I have to play the 10th man rule. Right? I have to play the 10th man rule. If everybody thinks that rate cuts are going to bring higher prices, I cannot agree with that. I can't agree with that. I have to play the 10th man rule. Same reason why I was buying NASDAQ down at like the 10,500 levels. That's why I was going into things like Nvidia and Microsoft when the market was down. That's why I was going into things like Tesla. I like to be ahead of the market. So if everybody's looking bullish, oh, rate cuts are going to send everything up, I'm expecting the market to course correct. It's just that simple. There might be some outliers that still perform. That's always going to be the case. So I think when we cut in September, that October, November, possibly even December, are generally not good months. That doesn't necessarily mean we're going to fall off a cliff, but I definitely think we trade sideways. I feel like we form larger reaccumulations. I feel like there'll be more liquidations. Again, it's a very common buy the rumors, sell the news. I mean, like, let's look at the chart. Right, let's just look at the chart real quick. Like, NASDAQ is not newly bullish, man. This thing has been bullish literally since fucking all the way down here. Like 11, this is adjusted. So technically this is like 10k if it wasn't adjusted for the contracts, if I turn this off. But again, we've been bullish all the way since down 10k. October of 2022, this is when inflation was at its highest point. This is when the least amount of people believed that inflation was going to get under control. This is when everyone's like, oh, inflation's 8%, inflation's 9%, oh, we're going to have to raise rates to 10%, we're going to have to go so much higher. This is when I call bullshit on all that stuff. And again, this is all recorded, so if you weren't with me back then and you think that's bullshit, that's up to you. People in chat, feel free to correct them. But now it's like up here, everyone's like, oh, the Fed's gonna cut rates, it's gonna go bullish, It's like, dude, I'm like, at this point, I think everybody above this level here is going to get fucking wrecked. That's just my honest opinion. I think that we cut rates, and we come down, and we correct down to like 17k, 16k levels. And then once all these people that bought all up in here, all the late buyers, once they all get taken out, then I'll flip back bullish. But for me to be like massively bullish up here, it's not going to happen, man. It's not going to happen. I think that same thing with crypto again. Like, you can look at all these charts. It doesn't matter if it's NASDAQ. It doesn't matter if it's crypto. Like, same thing. It's like all the way down here after FTX collapsed and we were looking at the accumulation. This is when I turned on my daily buys, man. Right? And I don't have those on anymore. Now I'm only buying Ethereum, but it's like this needs to course correct. I think we can get under 50k. If we retest 50k, then fantastic. You know, a lot of people that bought up in here, they'll all get panicked, they'll all get fearful. Then that's when we get back in. Alright, let me turn the music off. Let me turn Mr. Powell up here. We'll see what he's got to say.
Our economy has made considerable progress toward both goals over the past 2 years. The labor market has come into better balance, and the unemployment rate remains low. Inflation has eased substantially from a peak of 7% to 2.5%. We are strongly committed to returning inflation to our 2% goal in support of a strong economy that benefits everyone. Today, the FOMC decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. We are maintaining our restrictive stance of monetary policy in order to keep demand in line with supply and reduce inflationary pressures. We are attentive to risks on both sides of our dual mandate, and I will have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. GDP growth moderated to 2.1% in the first half of the year, down from 3.1% last year. Private domestic final purchases, or PDFP, which excludes inventory investment, government spending, and net exports, and usually sends a clearer signal of underlying demand, grew at a 2.6% pace over that same period, the first half. Growth of consumer spending has slowed from last year's robust pace, but remains solid. Investment in equipment and intangibles has picked up from its anemic pace last year. In the housing sector, investment stalled in the second quarter after a strong rise in the first. Improving supply conditions have supported resilient demand and the strong performance of the U.S. economy over the past year. In the labor market, supply and demand conditions have come into better balance. Payroll job gains averaged 177,000 jobs per month in the second quarter, a solid pace, but below that seen in the first quarter. The unemployment rate has moved up, but remains low at 4.1%. Strong job creation over the past couple of years has been accompanied by an increase in the supply of workers, reflecting increases in participation among individuals aged 25 to 54 years, and a strong pace of immigration. Nominal wage growth has eased over the past year, and the jobs-to-workers gap has narrowed. Overall, a broad set of indicators suggest that conditions in the labor market have returned to about where they stood on the eve of the pandemic, strong but not overheated. Inflation has eased notably over the past 2 years, but remains somewhat above our longer-run goal of 2%. Total PCE prices rose 2.5% over the 12 months ending in June. Excluding the volatile food and energy categories, core PCE prices rose 2.6%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households and businesses and forecasters, as well as measures from financial markets. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. In support of these goals, the committee decided at today's meeting to maintain the target range for the federal funds rate at 5.25% to 5.5%, and to continue reducing our securities holdings. As the labor market has cooled and inflation has declined, the risks to achieving our employment and inflation goals continue to move into better balance. Indeed, we're attentive to the risks to both sides of our dual mandate. We have stated that we do not expect it will be appropriate to reduce the target range for the federal funds rate until we have gained greater confidence that inflation is moving sustainably toward 2%. The second quarter's inflation readings have added to our confidence, and more good data would further strengthen that confidence. We will continue to make our decisions meeting by meeting. We know that reducing policy restraint too soon or too much could result in a reversal of the progress we have seen on inflation. At the same time, reducing policy restraint too late or too little could unduly weaken economic activity and employment. In considering any adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. As the economy evolves, monetary policy will adjust in order to best promote our maximum employment and price stability goals. If the economy remains solid and inflation persists, we can maintain the current target range for the federal funds rate as